Hello, everyone. Thank you for joining the Fair Work Ombudsman's webinar, Ending Employment FAQs Every Employer Should Know. I'm Jessie, and I'll be presenting today's webinar. Employment can end for many different reasons. Maybe an employee resigns or you dismiss an employee. Whatever the reason, there are rules you need to follow. In today's webinar, we will answer the most frequently asked questions we get from employers on ending employment. These include questions on notice periods, including payment in lieu of notice, final pay, redundancy, unfair dismissal, and unlawful termination. I want to stress that this webinar does not address, nor can the Fair Work Ombudsman answer questions on what are sufficient grounds for termination, the fairness of a dismissal, or whether a genuine redundancy has occurred. If you require assistance on any of these topics, we encourage you to seek independent legal advice. We won't be directly answering questions in the presentation today, but we do have a couple of helpers in our Q&A session of the webinar. So if you do have any questions, they'll be able to point you in the right direction if that's applicable. So please feel free to put your questions into the Q&A. It's an envelope with question mark tab. If you do have workplace issues or would like assistance with resolving a workplace matter, this webinar will not be your best point of contact, as the information in this presentation is only general in nature. And how it applies to you will depend on your personal situation. For more information and assistance with workplace matters, please visit our website on www.fairwork.gov.au or give us a call on 13 1394. Don't worry about taking notes on website addresses or any tools or resources mentioned in the webinar. For those who are watching this live, you'll receive an email after the session with all the links to the information we covered today. If you're watching on YouTube, you'll be able to access the links in the description below. Before we get into the main presentation, in the spirit of reconciliation, the Fair Work Ombudsman would like to acknowledge the traditional custodians of country throughout Australia and their continuing connection to land, waters, skies, and communities. We pay our respect to the elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. Today, I'm presenting from the lands of the Gadigal people of the Eora Nation, who are the traditional custodians of the land here in Sydney. Right, let's get started. First up, I'm going to talk about notice periods. But before we get into that, let's quickly touch on who doesn't get notice. So did you know that there are times when notice periods don't apply to an employee? For example, under the National Employment Standards, or the NAS, notice periods don't apply to casual employees, a person employed for a specific period or only does a seasonal work. For other examples of when notice period don't apply, you can visit our website at www.fairwork.gov.au/ending-employment. Most of the information we will be discussing today can be found there. Okay, so let's now look at the first common question we hear. If you need to dismiss an employee, what's the correct way to give notice? Under the NAS, employers are required to give employees notice in writing before ending their employment. Remember, there are exceptions, but in most circumstances, an employee must be given written notice if an employer wants to end their employment. So this includes a written confirmation of the last day of employment and a notice period which the employee can work or be paid instead of working. You can give notice to the employee by delivering it personally, leaving it at the employee's last known address, sending it by prepaid post to the employee's last known address, or sending it electronically if the employee agrees and can easily access it. When you give an employee notice, the notice period will generally start the day after you tell the employee that you want to end the employment and end of the last day of employment. So this leads us to our next common question. How much notice do I need to give? The minimum notice period you must give an employee is based on their continuous service with your business or company. Continuous service is the length of time they are employed by your business. As you can see on the slide here, under the NAS, If an employee has been employed for 1 year or less, you must give 1 week's notice. More than 1 year to 3 years, you must give 2 weeks' notice, and so on. In addition, an employee has to get an extra week of notice if they are over 45 years old and have worked for you for at least 2 years. Employees whose employment ends during the probation period are also entitled to a notice period based on the length of service. It's important to know that an award, registered agreement, or employment contract may set out longer minimum notice periods, for example, a 1 month instead of a week. So it's important for you to read and understand these documents to work out how much notice you should provide. Another important thing to note is if you want to give your employee a bit more notice of termination so you can have a bit more time to make future plans, for example, that's fine, especially if your employee agrees to. But be aware that if you provide more notice than required in the award, registered agreement, or contract, the employee is only obliged to work out the minimum notice required. However, if they choose to only work out the minimum notice period, you don't have to pay them for the extra notice. Like all things in the Fair Work system, employment contracts can't provide less notice than what an employee would get under the NES, award, and registered agreements. Another common question we often get from employers about ending employment is, what is payment in lieu of notice and when it might apply? Sometimes an employer may decide they don't want an employee to work their notice period and ends the employment early. If this happens, the employer has to pay out the notice period. If you choose to make payment in lieu of notice, employment ends when notice is given. For example, the employee is notified of their termination and the employee gets paid the full amount they would have been paid if they had worked until the end of the notice period. So this includes incentive-based payments and bonuses, loadings, monetary allowances, overtime, penalty rates, and any other separately identifiable amounts. Under the NES, payment in lieu of notice must be paid before or on the day of termination. So let's have a look at an example where an employee works some of the notice period and is also paid in lieu of the notice. So Gunter is a permanent full-time employee. He's been working at a steel mill for 5 months. They're still within the 6-month probation period. Gunter's manager calls them into a meeting and tells them that they have made the decision to end their employment. The manager explains to Gunter, even though they are on the probation period, as per the award and the NES, they are entitled to 1 week's notice. Gunter is given notice of termination on Tuesday. This means on Wednesday, that's the first day of the notice period. Gunter is told that they will only need to work 3 days of the notice period and that the employee will end on Friday. Then they will be paid out the 2 remaining days of the notice period. Gunter's employer will need to pay Gunter payment for the hours that they've worked, 2 days of payment in lieu of notice, and any unused annual leave they have accumulated. So related to notice periods is the question here, can an employee take leave during a notice period? And the answer is yes. An employee's notice period can run at the same time as paid or unpaid leave or other absences such as public holidays. An employee can take paid annual leave during a notice period if you agree to the leave. They can also take paid sick leave or careless leave during a notice period. But the usual rules apply for sick leave, that an employee needs to notify you as soon as possible that they're taking the leave, and you can also ask for evidence to support the leave request. It's important to note that a full-time or part-time employee will continue to accrue annual leave and sick leave until the last day of work, noting that sick leave is not paid out on termination. If you pay out the notice period, the employee's employment ends on the day payment is made, and they stop accruing leave and other entitlements. So we've covered quite a bit of what the employee needs to know when they want to end an employment relationship. I want to look at the reverse. What happens when an employee wants to resign instead? When an employee resigns, they can give notice verbally or in writing. Well, generally, casuals do not have to provide notice of termination. The NES doesn't have any rules about employees giving notice. The applicable award, enterprise agreement, or employment contract says out how much notice an employee needs to give when they resign. For example, under the Restaurant Industry Award 2020, full-time and part-time employees are required to provide notice when they want to resign. The amount of notice they need to give is based on how long they've been employed for. As an employer, you don't have the choice to accept or reject your employee's resignation. However, it's best practice to acknowledge your employee's resignation. This helps to ensure there's no ambiguity down the track about when the resignation took effect. Once you receive the notice, you can discuss with your employee whether they will work out the notice period or end the notice period early. So, what happens when you actually want to end the notice period early? If an employee resigns and provides the required notice period or more than the required notice period, and you decided you don't want them to work some or any of the notice period, several options may be available, including coming to an agreement with them on when to stop working or ending the employee's employment. If you reach an agreement with the employee to end the employment earlier, the employee will still be entitled to receive at least the minimum notice period. If there's no agreement and you don't want them to work out the notice period, you can terminate the employee's employment and provide them with the minimum notice period or payment in lieu of notice. Another common question we get around employees' resignation is what happens when an employee doesn't provide notice at all? If an employee leaves without giving notice, first of all, you should check the applicable award or registered agreement for information about whether the employee needs to give notice. Most of the award will say that employer can deduct an amount up to 1 week's wages from the employee's pay if the employee hasn't given enough notice under the award. If the employee is over 18 years old, the employer didn't agree to a shorter notice period, the deduction isn't unreasonable in the circumstances. However, you can only deduct pay from wages owed under the award. That means you cannot deduct money from other entitlements owed to the resigning employee, such as accumulated leave or other payments under the NES or over award payments. You also can't deduct money if you agreed to a notice period that's shorter than the notice required under the award. Now that we've looked at some of the rules around notice periods, I want to discuss another important question we get a lot from the employers, which is what should I pay when employment ends? Final pay is the last pay an employee gets after the employment ends. Final pay is made up of wages owing for hours an employee has worked, including penalty rates and allowances, any annual leave owing, including annual leave loading if it would have been paid during employment. As mentioned earlier, sick leave is not paid out when employment ends. Also, if it applies, final pay can also include accrued or pro rata long service leave, payment in lieu of notice, redundancy pay, which we will provide a bit more information on that later. Rules about when an employee's final pay must be paid can come from an award, enterprise agreement, the NES, and the Fair Work Act. Most awards require employers to pay employees their final pay within 7 days after the last day of employment. Where the NES requires an entitlement to be paid sooner than the award or enterprise agreement, then the NES must be followed. For example, payment in lieu of notice must be paid before or on the day of termination. This is a requirement under the NES. So related to final pay is another common question we receive from employer, which is what is redundancy? As mentioned at the very beginning of this webinar, the FOI cannot provide advice on whether a genuine redundancy has occurred. If you need assistance in making that decision, you will need to seek independent legal advice. Okay, on that note, let's look at redundancy a bit more generally. Related to final pay is another common question we receive from employers, which is, what is redundancy? As mentioned at the very beginning of this webinar, the FOI cannot provide advice on whether a genuine redundancy has occurred. If you need assistance in making that decision, you will need to seek independent legal advice. On that note, let's look at redundancy more generally. Redundancy occurs when you no longer need an employee's job to be done by anyone, or your business becomes insolvent or bankrupt. The job itself, so not the employee, becomes redundant. Redundancy can happen when the business introduces a new technology, for example, then the job can be done by a machine, a slowdown due to lower sales or production, it closes down, the business relocates interstate or overseas, restructures or reorganizes, including because a merger or takeover happens. A dismissal is not a genuine redundancy if you still need the employee's job to be done by someone else, for example, if you hire someone else to do the job. You have not followed the relevant requirements to consult with the employees about redundancy under the award or registered agreement. Or you could have reasonably given the employee another job within your organization or an associated entity. If an employee's redundancy is not a genuine redundancy, then they may be able to lodge an unfair dismissal claim with the Fair Work Commission, or what I'll refer to as the Commission. I'll discuss unfair dismissals a bit later on. All awards and registered agreements have a consultation process for when there are major changes to workplace that are likely to have significant effects on employees, such as redundancy. The consultation process sets out things like you need to know when you decide to make changes to your business that are likely to result in redundancies. This has to be done as soon as possible after the decision has been made to make these changes. If you're not sure about how to consult with employees, we've got a best practice guide that can help you. I'll include a link to the resource in the follow-up email and the video's description on YouTube. Now, it's also important to know that if your business is considering making 15 or more employees redundant, you must give Services Australia written notification of the proposed dismissal as soon as possible. This must happen before the employees are made redundant. There's more information about this on Services Australia website. Before we go into how redundancy pay is calculated, first, I want to look at who doesn't get redundancy pay. Most small businesses don't have to pay their employees redundancy pay under the NES. However, there are exceptions to this rule, such as businesses that become small businesses due to downsizing, and employers covered under an industry-specific redundancy scheme. Under the Fair Work Act, a small business is an employer with less than 15 employees at a particular time. When counting the number of employees, employees of associated entities of your business are also included. Casual employees are not included unless they're engaged on a regular and systematic basis. Other employees who don't get redundancy pay include those who have less than 12 months continuous service with the employer. They've been employed for a specific period of time, identified project or season, and they are casual employees. For more information or examples on who doesn't get redundancy pay, please visit the Ending Employment section on our website. Let's now look at how redundancy pay is calculated. The amount of redundancy pay your employee receives is based on the period of continuous service. When calculating redundancy pay, unpaid leave doesn't count towards continuous service, but it doesn't break continuous service either. Under the NES, an employer, or other than a small business employer, they will have to pay the minimum redundancy entitlements. As you can see from the slide here, if the period of continuous service is at least 1 year, but less than 2 years, It is 4 weeks of redundancy pay, and so on. Some awards will have industry-specific redundancy clauses which apply instead of the NES. Industry-specific redundancy clauses contain different rules about when a redundancy happens, who the redundancy clause applies to, and what an employee needs to be paid for. You can use our notice and redundancy calculator located at www.fairwork.gov.au/pact to help you calculate entitlements when employment ends. I also want to mention that if redundancy pay is applicable, you can apply to the Commission to have the amount of redundancy pay reduced if you find other acceptable employment for the employee or you can't afford the full redundancy amount. You can only apply to the Commission if the redundancy pay comes from the NES. You can't apply to the Commission if the redundancy entitlement comes from an award or registered agreement, which includes the industry-specific redundancy. Now that we've looked at some of the frequently asked questions we receive around ending employment, I want to spend a bit of time discussing unfair dismissal and unlawful termination. Although these are claims that the Fair Work Commission deal with, we often get questions about them, especially about unfair dismissals. So let's have a look at these questions. What is unfair dismissal? Unfair dismissal is when an employee is dismissed from the job in a way that is harsh, unjust, or unreasonable. It's not a genuine redundancy. It's not consistent with the Small Business Fair Dismissal Code if the employer is a small business. Eligible employees can apply to the Commission for reinstatement or compensation if they think they've been unfairly dismissed. When deciding if a dismissal was harsh, unjust, or unreasonable, the Commission considers a number of factors, including whether there was a valid reason for the dismissal, whether the employee was given a reason and a chance to respond, if the dismissal was due to an underperformance, whether the employee had been warned about the performance before the dismissal, and anything else that deemed relevant. To be eligible to apply for an unfair dismissal, the employee must have worked for the business for at least 6 months or 12 months if they work for a small business. They should be covered by the National Workplace Relations System and be covered by an award, enterprise agreement, or in less than the high income threshold. Employees need to apply to the Commission within 21 days of their dismissal. Well, I'm a small business owner. Does unfair dismissal apply to me? Different unfair dismissal rules apply to small business. As mentioned earlier, employees need to have worked for 12 months with a small business instead of the usual 6 months to be eligible to apply. The Small Business Fair Dismissal Code also helps small business owners follow a fair dismissal process. By following the code can help a small business defend an unfair dismissal claim at the Commission. Let's look at an example when an employer might refer to the Small Business Fair Dismissal Code. Carolina runs a small pharmacy and has 8 employees. Jason has been working for Carolina as a full-time pharmacy assistant for over a year. Recently, Carolina has some concerns about Jason's performance. Over the past months, Jason has been getting to work 45 minutes late and taking unauthorized breaks. Carolina has had an informal discussion with Jason about the issues, but Jason continues to arrive late and take unapproved breaks. Carolina wants to know what next steps she can take. She learns about FO's Small Business Showcase and the information available to her, which includes the Small Business Fair Dismissal Code, a manager's online course about difficult conversations in the workplace, and templates to help her about performance management and issue warnings. Carolina uses this information and follows the steps in the code. She saves a copy of the code and other documents related to Jason's performance. Carolina knows she may need to show the Commission she followed the code if an unfair dismissal claim was made. You can download a copy of the Small Business Fair Dismissal Code from our Ending Employment webpage. So under Help with termination, then click on unfair dismissal. I'll also add a link in our follow-up email and in the video description on YouTube. Another commission issue I want to quickly discuss is unlawful termination. Unlawful termination is different from an unfair dismissal. It happens when a person's employment is ended and the reason is, or includes a reason, that is prohibited by the Fair Work Act. These include terminating an employee because they have been temporarily away with illness or injury, they are or are not a member of trade union, they have filed a complaint or participated in legal proceeding against you, the request and or take maternity or other parental leave, they're engaging in a voluntary emergency management activity, and they are away from work temporarily where their absence is reasonable in all the circumstances. It also includes terminating an employee based on their race, color, sex, sexual orientation, age, physical or mental disability, marital status, family or carer's responsibilities, pregnancy, religion, political opinion, national extraction, social origin, breastfeeding, gender identity, intersex status, and experiencing family and domestic violence. Similarly to an unfair dismissal claims, employees must apply within 21 days of their termination. But unlike unfair dismissal claims, there are no minimum service periods. For more information on unfair dismissals and unlawful terminations, you can visit the Commission's website at www.fwc.gov.au. We can't tell you whether or not you can terminate an employee because this is a decision for you to make as an employer. But what the Fair Work Ombudsman can do is explain the rules around ending employment, as we've covered in today's webinar. As mentioned, much of the information I've discussed can be found on our website at www.fairwork.gov.au/ending-employment. There you will find information on dismissals, resignation, redundancy, final pay, and help with termination, including links to the notice and redundancy calculator. We also have some excellent resources to help you address underperformance and help you resolve workplace issues. We've got information on managing employees' performance, including how to deal with underperforming employees, giving warnings, and resolving workplace problems. You'll also find free guides and templates that cover setting up a performance system checklist, performance improvement plans, and much more. Our website has information to help you with everything we've covered today and more. To help you navigate it, we've put together a dedicated webinar that goes through the key tools and resources an employer should know about it. It's up on our YouTube channel, and again, I'll include a link along with links to everything else I've talked about today in the follow-up email and on the YouTube description. If you have questions or are seeking guidance specific to your situation that does not require legal advice, there are a number of ways you can contact us or get general information. For help with workplace information, give us a call on 13 13 94 on the Fair Work Info line or through the Translating and Interpreting Services TIS on 131 450 to speak with our helpful advisors who can provide tailored advice about your rights and obligations. For general information, you can contact us online through our online portal, My Account, and we'll respond within 10 business days. We know your time is valuable, so please make sure your inquiry is suitable for My Account before submitting it. If you are a small business, you can contact us through our Employer Advisory Service, which gives eligible small businesses free tailored written advice on pay and entitlement issues. This service assists employers in understanding and complying with pay and entitlement obligations under the awards and the Fair Work Act. You can also visit the Fair Work Ombudsman website or subscribe to our email updates. And you can follow us on our social media channels. Finally, we regularly deliver webinars tailored for different industries and audiences. Please check our dedicated webinar page at www.fairwork.gov.au/webinars. for information about upcoming webinars. Well, thank you again for attending today's webinar. If you know anyone will be interested or you'd like to go through any of it again, we'll have it up on our YouTube channel. There will be a quick survey after the webinar has ended. We'd appreciate if you could answer a couple of questions to help us develop our webinar program. It should only take a few minutes to complete, and we would really value your feedback. Thank you for your time again, and enjoy the rest of your day.